Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me Shail Bhatnagar, our market editor. Well, Indian markets are likely to open on a positive note today, but where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more. But first up, the top headlines for you. Overseas cues improve for Indian stocks as the US Federal Reserve pauses its rate hike for the second meeting in a row and asks, should we do more? US and Indian markets rally and the Lal Street is likely to follow suit. It's the weekly expiry of Nifty futures on Thursday, even as value investors hunt for beaten down stocks in a market trading near 4-month lows ahead of major festive season demand. Very good morning, Shell. It's a fresh Thursday morning. And, the markets are also likely to open on a positive note today. The US Fed has paused its rate hike for the second time. So, and also it's the weekly expiry of Nifty futures as well. So let's understand from you that what should be the strategy on Nifty today.
Good morning, Tanya, and a very warm welcome to thousands of people who've joined us from different parts of the world to watch what is a weekly expiry of Nifty contracts on Dalal Street. Yes, there has been a significant shift when it comes to the US Federal Reserve's stance on interest rates, as also how it reads the US economic data, and that has pushed US markets to a fairly strong uptick yesterday. You'll see the changes right in front of you. There has been a percentage point rise in the Nasdaq, the S&P 500, as also the Dow Jones index, and it has percolated down to Asia. So the Nikkei is up 300 points in Japan, up about 1%. Similar sort of gains are seeing on the Hong Kong index, so those are opening up fairly sharply, and I'm hoping that on weekly expiry day you'll see a very strong bout of short covering happening on the Lal Street, especially on the Nifty, and the losses that you had seen over the last 1 or 2 days, some of them will be pulled back into the bull quarter as far as the Nifty is concerned. In front of us, the Nifty shut about 90 points lower at about 18,990, just a shade below 19,000. And if you look at how the options chains is stacked up, you see some sort of fresh resistance seen at about 19,100 and supports at 18,800. This is the Nifty daily chart in front of you. We had 3 consecutive days of gains over this 5-day period, and then a bit of profit booking just as the Nifty approached its 100 DMA. If this triangle is completed, then let's see how it goes. But for the day, I think there will be a decent bout of short covering, and you'll see a 50-60 point rise on the Nifty today. Tanya.
Absolutely, got that, Shell. And let's talk about Bank Nifty as well. It was down 140 points yesterday, but it is all set to begin a fresh weekly expiry.
Absolutely.
So if you look at the index, it is below the 200 DMA level. So what are you looking on Bank Nifty today, and what are the fresh support and resistance levels?
So, Tanya, it was at 42,700 that the Bank Nifty shut shop, and it's been a flat week for the Bank Nifty as well. Of course, a fresh weekly expiry that will now end on November 8th takes root. The Bank Nifty has been in a bigger problem compared with the Nifty, well below 200-day DMA, and this is the structure of the daily chart. If you see the last 2 days, you've seen significant falls coming into the index. Whatever gains were made in the first 3-4 days of the previous weekly expiry, the bears taking them back to a large extent. Let's see how it goes, but as far as support levels are seen, 42,600, 42,500 are levels on the Nifty options chain, which show a strong put build-up, which basically means a strong support level put in place by the bulls, and the resistance is now at 43,000. So I would imagine that you will see a gap up in trade today. A lot of short covering will happen, and then again, because the overall structure is weak as far as the Nifty is concerned, the bank Nifty is concerned, you will see some pressing sales coming in. So a gap up based on what the gift Nifty is saying, and then maybe a flat to sideways to a downward trend day, Tanya.
Okay, absolutely got that. That was Bank Nifty for you. But now it's time for us to welcome our market guest as well. A.K. Prabhakar joins us today. He's the head of research at IDBI Capital. Good morning, Mr. A.K. Prabhakar. And always good to have you on BTTV, and so good to see you after such a long time. So I want to now understand from you that, the major global event that is now done and dusted. How are you approaching markets at this point in time, and what's really next?
Yeah, good morning. No, there are a lot of things which are very interesting. We always worry about geopolitical risk, high crude prices. No, and I have one data. Now, year till date, Nifty has given 4% return, whereas few stocks have given three times return also. One such stock is Zindal stock. Now, and when I heard the con call, I understood. There was one benefit to them, that is Ukraine-Russia war, which benefit them because seamless pipe. Ukraine is one of the major, due to which in the last 3 quarters, Jindal stock margins have improved from 9%, now it is 16%. So no, there are always pockets of profit or profits of gains which are likely to come. That is what concentrate instead of looking at the noise in the market. So I think this quarter, if you see the results, broking as a company, AMC as a sector, and exchanges have done well. BSE India is one of the top gainers in Nifty 500. Now even Angel One, ISEC. Now I was listening to Geojit; they have done very good. Broking companies, because of the higher volumes, they have done very good. So no, I think we need to look at where the next gains can come. That is more interesting to me.
Good morning, Mr. Prabhakar, and it's a pleasure to welcome you on Market Today on Business Today Television. Good to have you, sir. You've mentioned Jindal Saw as one of your picks. Any views that you will have on blue chips? You mentioned that the Nifty is up just 4% so far in 2023. Normally, we've seen a CAGR of about 12%, 13% annually. How do the blue chips look to you? Any places that you would like to put some bets in on the long side in the form of a SIP for long-term holding?
Good morning, Shailendra. After a very long time, I'm talking to you. Now, see, very important is, I like stock where I can make returns. Now, in blue chip, I don't see that kind of upside. Yeah, maybe one or two can be there, but it takes a lot of efforts. I was calculating the total revenues. So, 2 lakh above revenue, only 11 companies in India generate 2 lakh above revenue in a year. And in that, L&T is very, if you notice, now they have an order book of almost 2,45,000 crore, sorry, for 4,45,000 crore, out of which 35% comes from abroad. International orders is 35%. In this first year, 50% of the orders have come there. So that is one interesting pick. But LNT will not give you the return which a mid cap or a small cap can give over a period of time. So if you want a large cap, there is a margin of safety, but it cannot beat index, or it cannot outperform certain metrics. So we need to have a balanced portfolio in that.
Okay, so we'll take L&T and Jindal Saw as your top picks as far as markets here are concerned. Also the fact, Mr. Prabhakar, that the market has given supernormal returns to mid-cap IT stocks. We've discussed Birlasoft yesterday, a sharp rally on nuclear software. Persistent is just out of control when it comes to daily stock prices. How do you see the mid-cap IT space, and is there any value left, or should we just stay on the sidelines?
No, Birlasoft still, the potential is there. The management has guided that the next quarter also will be very good. We also have a buy on Newgen. Now, we have been covering the stock for a long time, and the stock has doubled for us. But still, we feel, some value is left. No, but no, in mid cap, we need to be careful because the valuation is running ahead of the market. But these are two picks in mid cap. But in large cap, we like Tech Mahindra. Now, the new management said you have to give us 100 days time. So if that is the case, then till April, he takes over in December. So, maybe if somebody is ready to wait for 2 years, Tech Mahindra is something you can look at.
Okay, absolutely got that, Mr. Prabhakar. And since you were talking about mid cap and small cap space, don't you think it is a little overheated? Because, given the amount of rally that we have seen so far, especially in the mid cap space. But still, I would like to know from you any stocks that you have, any picks that you have still at these current levels from the mid cap and small cap space.
See, there are few segments which have run up. No, I'm not saying no. No, railways in that mid cap has run up. No, few defense stock has run up. But there are potential stock which can do very good. There is one data which came yesterday or about 2 days back, which said that real estate registration, the total houses registered in Mumbai for the first 10 months is more than 1 lakh. And October registration data is highest in 11 years. That means real estate, and as an economy, we are $3 trillion economy. In the next 5 6 years, we will be more than double. Then real estate as a sector has to do well. So I like a lot of companies in real estate. If I have to talk, Oberoi is something I'm very positive on. Loda premiumization is playing out. So Loda is something I like. DLF, I like, Godrej Properties in that space. We are small cap company, Shriram Properties we like, Holte Patel, Ashiana Housing. So there are n number of companies. And if I have to take a regional player, Ganesh Housing is something interesting, which is based out of Ahmedabad. They have a huge land bank. So there, real estate as a space has huge potential. But you need to be 2 to 3 years investor here. Nothing is going to happen immediately. And you have to look at pre-sale, not the revenue for these companies.
Okay, absolutely. And also, Mr. Prabhakar, let's discuss some of the stocks that will react after their second quarter numbers. And we have Tata Steel and Britannia Industries. So, Tata Steel, the second quarter was a weak one. Of course, the European business has disappointed. And for Britannia, if you see the revenue growth, that missed the estimates. But we have seen a sharp margin expansion. So, what are your thoughts on Tata Steel and Britannia after the results, and how do you look at the numbers?
See, Tata Steel Indian business has done very well. 20% EBITDA margin in standalone is very good. The problem is they have taken a return down in UK operation where they will have a electric arc furnace, and even in India that is going to be the way. They have a policy that pollution has to be controlled. ESG norms, Tata as a group follows that very effectively. So if that is the case, you need to give it time for the performance. But metal is a cyclical. So when there is a bad time, I will look at it. In good times, the stocks have rallied. In good times, I will never touch. I normally like stocks when they are in bad time. So in good time, you make returns. So Tata Steel is a avoid from me. Britannia also, there are few things, where I am bit worried about it because of their lending to go air. So corporate intercorporate deposit is there. So I will avoid the Britannia also. There are other pockets where things can be better.
Okay. And Mr. Prabhakar, the one point I wanted to check up with you is that although we've seen a very benign environment as far as Nifty is concerned, Tanya is absolutely right. Fire away rally on mid caps and small caps. Any particular pockets that you find overextended, overvalued, those probably in a bubble or so, in bubble territory? Anything that catches your attention at that space?
Yeah, there are a lot. EMS as a sector has run up. I know many stocks are trading at 100 times or 120 times, which I cannot understand. For me, I like value and I like to buy when there is a bad time. But here is one sector, where the growth is very good. Yeah, I agree. They are growing at 25-30%. But even cash generation is not there. Keynes yesterday came with the results. Dixon, Amber, the valuation is bit stretched. So no, for me, I'm a very low risk taker. So I would avoid the EMS space in full. No, and that is something which is worrying me also. And even railway stock, railway PSUs are trading at 40 times, 45 times. Yes, the PSUs, in the last 8 years, they have improved their efficiency. If you see the employee cost, it has come down. You take any PSUs, the employee cost has come down. They have improved their margins. But the valuation at 40 times doesn't justify for a PSU. And if there is a change in government, hypothetical question, if there is a change in government, there can be inefficiencies. So I am worried about few PSUs at this current level.
Fair point, Mr. Prabhakar. You've raised a lot of very, very valid red flags, especially in the PSU basket, and of course, the EMS space, where companies build brown goods such as televisions, such as washing machines, such as refrigerators for branded OEM players. A lot of sharp run ups happening there. The problem with the market is that when you have a liquidity gush fixed into Dalal Street, then valuations, of course, go towards the sky before they correct very sharply. So that takes care of segments where you see extreme exuberance, lot of froth, Mr. Prabhakar. But as a space or as a sector, you've been a value buyer. Tell us. Where are these values residing? You don't like metals, you don't like PSUs, you don't like EMS, you don't like Nifty. What do you like?
Oh, there are no. See, in each sector there are values. For example, in defense PSUs, HAL has a value. No, because their expanded capacity, it will take 2 years to come on stream. So no, their revenues can double in next 3-4 years. So that is something I like. There are few chemical companies which have done capex and their margins are at the lowest due to China dumping, where I feel this cannot continue for a very long time. And when things change dramatically, they will start to benefit. One such case is Ami Organic, Deepak Fertilizer, even SRF. It 1 year, but now their capex has been continuous. So these are few things I like there. Now there are few other companies which have done huge expansion, but it will take time for them to reflect in their revenue. So now, for example, in broking, JM Finance has not rallied, and in the last phone call they said one more quarter of they need to take a write off. But if you see the number of IPOs which have come, I think almost 40 or 45 have come. 60% was managed by JM Finance. So now, if you are looking at 1 year, 2 year, then there is a value here also.
Okay. Mr. Prabhakar, let me just get these names right. You've mentioned Ami Organics, Deepak Fertilizers, Hindustan Aeronautics. Could you just please elaborate on the 5 or 6 tops that you just mentioned?
See, Ami Organic has a tie-up with a European company for 10 years. So now, and they have taken over a company called Baba Chemical, where 55% stake is with Ami Organic, and it is by 3 scientists who have started it. So they have the technology, but Ami Organic can scale up their sales. They were operating margins and low capacity. AMI Organic as a structure is better, so they will scale it up. So and they are also spending on capex, which will come on stream in the next 1 year. So somebody who is looking at 2 3 years, then this is one stock which can give 50% return. That is our view there. Deepak Fertilizer. So, the ammonia plant which is likely to come, which is their all byproduct, DAP or whatever it is, it is their important, raw material which will improve their margins over a period of time. So here also, the stock trades at an attractive valuation, but I think 1 or 2 quarter more of pain, and there was a dumping from Russia for this company, which has impacted their profit in the last 2 quarters. But going forward, once everything normalizes, so this company will benefit, and they have a land which has to be sold in Pune. They are waiting for a better price, is what I can feel. But the management has not indicated. But once they sell, their debt also will come down in this company. HAL, going by the geopolitics, I think defense PSUs are here to gain. We have signed few agreements to manufacture engine, but it has to pass US Senate. But few things will is already there in the pipeline. So when you expand your capacity, and a lot of countries want to move away from US or Europe to buy your helicopter or your small flight, HAL will be the alternative. And already we are seeing many neighboring countries getting HAL orders.
Fine. So this is the list that we have curated from Mr. Prabhakar. There is Hindustan Aeronautics, there is AMI Organics, Deepak Fertilizer, the ones that I could immediately catch, and of course JM Financial. Just one word of caution on JM Financial. It's always been the bridesmaid and never the bride. Over the last decade or so, there have been many just false alarms in hindsight that the stock will move, the company will do phenomenally well. But deep value investors have remained deep value investors. With that overhang and that caution, you need to look at JM Financials. But the other three stocks that Mr. Prabhakar mentioned, HAL, Deepak Fertilizer, and AMI Organics, present a wonderful opportunity. Please also take another independent financial advisor's view should you wish to get into these stocks, and only in SIP mode, no bulk buying. We'll also welcome Ashish Chaturmotha in a while. As luck would have it, Mr. Chaturmotha is with JM Financial Services. While he will not be answering on his particular stock, but nevertheless, life is made up of strange coincidences, and especially in markets, they prove to be very fruitful. We'll wait for Ashish to join us, and we'll also wait for the pre-open markets to take. Mr. Prabhakar, any medium to long-term view on the bank Nifty? Because now we are below 200 DMA. I'm just talking about banking sector in general.
I like few PSUs in that pack. Union is something where the management has guided their recovery is going to be very good in the second half. They have moved to a digital space, and the stock trades below book value. So now, if you are looking at 1 year and 15-20% return, I think Union Bank for that. But I think City Union Bank also, the worst is almost over. But for a value investor, City Union Bank offers better value. So but I don't look at the bank Nifty as such. That doesn't give lot of returns to investors. But we need to understand HDFC Bank. Due to merger of HDFC and HDFC Bank and the aggressive expansion which they have started to do. Last financial year, 1,200 branches they have expanded. This year, their plans is 1,500. Next year, another 1,500 branch. When you expand your branch network, to break even, it takes 2 or sometimes 3 years also. So that kind of aggressive action will not lead any meaningful upside in HDFC Bank. So somebody who is looking at less than 2 years should avoid this, is my view. I can be totally wrong. But, for a long-term investor, yes, HDFC Bank, due to this aggressive expansion, will give better returns. So, but, we need to understand HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion, will give better returns. So, but HDFC Bank, due to this aggressive expansion expansion plan, it will benefit over a period of time.
Okay, absolutely. Shail, I want to discuss Tata Motors with Mr. Prabhakar, but it's already, I think, pre-open time. So you want to take it away?
Okay, Tanya, we'll wait for Mr. Prabhakar's view on Tata Motors, which has been a fantastic value creator. But for now, it's a 46-point downtick on the Nifty on weekly expiry day. Remember, it being Thursday, so weekly FNO contracts on this main index will end today. It's not looking too bad, Tanya. The Nifty is now in the green. 18,990. And let's look at stocks which are ticking in the green first. Kotak is 0.3% higher, 1729. Okay. Let's look at L&T. The lone Nifty stock that Mr. Prabhakar prefers is now up 1% almost at 2920. HDFC Bank, the Lords be praised, 0.3% higher, 1480 in the green. Bajaj Finserv 1580 up 0.5%. Kotak 0.3% higher, 1730. SBI up 0.28. Reliance in the green up 0.4% at 2305. Tanya, it's going to be a good day, it seems. Reliance in the green, most banks in the green. And let's look at what Infosys is doing. It's flat at 1354, and TCS is also flat at about 3335. Only it's Hindustan Unilever which is down 1%, 2450, and ICICI Bank which is down 0.5% at 910. So this is how the index heavyweights are structured, and the Nifty, like I said, will open in the green. It is now stabilizing 30, 31, 41 points higher. 19,000 is back with the bulls. Let's shift focus to the FNO space and look at stocks that are making some noise. Tata Steel post earnings very, very dismal, down 10% at 104, 105. This is a serious cut. Let's look at top gainers in the FNO space. Britannia up 6% post earnings, 46.95. Hero Motors continuing its trend, 6% higher, 32.80. Remember, these prices will settle down. You don't see blue chips jumping 5 or 6% immediately. I have a green tick on RECL, 1.9% higher, to 88.20. A nice green tick on Idea Cellular. Remember, the company is paying off its government dues. Front page news coming in, 1.5% higher at 13 rupees. You have a very strong Ashish Chatramuta to join us to take a technical view on this very sharp bounce. But Tanya, over to you and to Tata Motors with Mr. Prabhakar.
Absolutely, Shell. So Tata Motors will be in focus today ahead of its second quarter earnings. And the company is expected to remain in the black with a net profit of 3,250 odd crores in the second quarter, led by softening commodity costs, JLR's volume ramp up, and operating leverage. The total sales, if you see Mr. Prabhakar, they are also up 6% at 82,954 units versus 78,335 units on a YY basis. So, what are your thoughts when it comes to Tata Motors, Mr. Prabhakar?
Yeah. See, Tata Motor is a unique company. About few days back, one article I was reading. When it comes to innovative index, only Indian company, which is there in that innovative index, or they spend on R&D, Tata Motors is there. Almost they spend 9% in R&D. So, and the amount they spend is almost $4 billion. So, it is a great company, and once they start to perform, I think it can even double in next 5-6 years. 15% CAGR is possible, and if you take the total revenue they do in a year, I think they have crossed 3,50,000 crores, and total PV market in India is almost equal to that. So that is the revenue they do. And I don't think any Indian company is 50% revenue when you compare to Tata Motors.
That's a very sensible view coming in on this particular stock, and a very, very aggressive stock price in front of us, record highs on Tata Motors. They've also given an option to Tata Motor DVR shareholders to merge into the parent. So, and of course, the EV cycle in India belongs only and only to Tata Motors. If you look around the roads, if you drive extensively on highways, the maximum EV vehicles that come on cross you or you overtake them are from the Tata stable. We'll wish a very good morning to Mr. Ashish Chatramotha from JM Financial Services. He's the executive director and the fund manager there. Ashish bhai, a very, very warm welcome to you, and all the festive greetings. We are meeting after a very, very long time, so we've been missing you quite a lot. Let's just shift focus and shift gears very rapidly to the 2 or 3 top picks that you see outperforming this market at 4-month lows.
Good morning, Shailji. Good morning, everyone on the panel. I think, see, broadly markets are have seen some correction and trying to see some kind of consolidation at a lower end. My sense is if there could be a range bound move in the markets between 18,800 to 19,300 on a broader basis. And within this range, I think there are selective names which are showing some strong relative strength. As a disclosure, a few of the names we are going to discuss, we are already holding these stocks in our core portfolio XPMS strategy. First one would be a stock like CDSL. So we like CDSL as a good proxy to the overall equity, financialization of themes, and I think the way the stock has given a massive breakout on the monthly charts above 1450 trajectory, it looks like we are headed towards all-time high trajectory and eventually see somewhere close to 1800 as a positional target in CDSL. In the last 3 trading sessions, we have seen some massive activity in the volume pickup. So clearly, I think both the price and volume clearly indicates there is a strong action. Now, if you look at the core fundamental perspective of the company, I think this is one company which has got it is operating in a duopoly market of depository business, and within that also CDSL has a dominant market share of close to 75% so which basically because of the strong retail participation. We believe that there are some optionalities also in terms of repository business which will give a good flip. And there is very recent news which says that almost 14 lakh private companies, they need to dematerialize their shares by September 2024, and the only exclusion is small companies which comes around 50,000 numbers. So there's a very big opportunity which is going to which you are going to witness in this space. And I think the kind of new IPOs which are coming is also going to give a lot of fillip to CDSL. So keeping all this in mind, I think there's a good proxy to play this entire theme of financialization of savings. We have already seen a massive uptick in the exchange like BSC, where the stock has already seen a 300% kind of jump in last couple of months. So we expect a very strong rally to emerge in stock like CDSL in days to come.
Okay, absolutely. Good morning, Mr. Chatramotha. This is Tanya joining in the conversation. What are your thoughts on Bank Nifty? Because this index is also set to begin its fresh weekly expiry today, and it is trading below the 200 DMA level as of now. So, what are the fresh resistance and support levels that you're working with?
So I think Bank Nifty is showing some weakness in the last couple of trading sessions, and we have seen some relative underperformance also in Bank Nifty. My sense is, but if you look at from a long-term positional perspective, it looks like 42,400, 42,500 is going to act as a very very strong support zone. But at the same time, 43,300, 43,400 is going to act as a resistance zone. So broadly, both the indices, whether it is Nifty or Bank Nifty, is going to trade in a very narrow band, and I don't see 2-3% here and there from current levels. So broadly, this is the consolidation we are going to witness. But yes, my sense is PSU banking as a basket is going to see some relative outperformance as compared to Bank Nifty. So my focus would be on PSU Bank Bs as an ETF, which shows some relative strength as compared to the larger cap indices, and that's where my sense is around 52-53 zone. PSU Bank Bs ETF has formed a very strong base, and if we continue to hold or give respect to these levels, then I think there is a good possibility of PSU Bank Bs ETF hitting 60-62 kind of trajectory. Also from a valuation perspective, I think the entire PSU bank, if you look at from a average basis perspective, it is trading at 0.7 time price to book. So we expect this this level to reach somewhere around 1.1 1.2 times, and that's where a lot of that's where the fair value comes for the PSU banking stuff. So I think the relative outperformance of PSU bank Bs should continue.
Wonderful. Tanya, I think we have a great mix today. Mr. Prabhakar is a value investor and he buys beaten down stocks. Therefore, AMI Organics, Deepak Fertilizer, Hindustan Aeronautics, and of course City Union Bank and Union Bank. And the finest momentum trader that I know amongst 3 or 4 individuals is Mr. Ashish Chatramota. Therefore, CDSL. That's one stock that has been discussed over the last 1 or 2 trading sessions as well, and it's the all-time high on this stock is somewhere like 1700 rupees. All its partners in work, whether it's Angel Broking, whether it's Bombay Stock Exchange, whether it's MCX, whether it's the very bullish commentary on the unlisted NSE, this space is buzzing with gains. And CDSL, as Ashish Bhai very wonderfully discussed, is one of those prime examples of a fabulous monopoly trade in the market. The Nifty, meanwhile, gentlemen, is up 130 in pre-open trades, 19,120. Remember, today it's the weekly expiry. There is a very strong overseas cues tailwind that is benefiting the index, and of course we've seen 2 days of fairly serious selling. So that's how the market is at the moment. Your view, Ashish, on Birlasoft and KPIT Technologies, both your erstwhile favorites, both counters on record highs.
So I think yes, Shalbhai, I think Birlasoft, first of all, it has retested its previous January 2020 high, which is close to 580 level. So this is one stock which has been hitting fresh 52 weeks high, and now closer to its all-time high after a consolidation of good 1.5 years. So almost 18-19 months kind of consolidation, and now this is a fresh breakout. We saw results were also very good, so it also indicates that the stock should continue its rally. Although many a time it has been discussed, the stock has hit a kind of overbought trajectory, but we also need to understand with that the pure basis numbers, we are seeing some significant re-rating coming into Birlasoft, and I think now a new base has been formed in the stock around 540 trajectory. Till the time we sustain above 540, there is a very strong likelihood stock might move towards 650 kind of trajectory. So yes, Birlasoft, Persistent, these are the names we have been liking in the mid-cap IT space. To play this entire case theme, which is connected autonomous shared mobility and electric vehicle, we have been mentioning about KPIT and Tata Elxsi as our preferred bets. And as a disclosure, both these stocks we continue to hold in our portfolio Apex PMS strategy. I think again KPIT has posted very strong set of numbers, moving towards 20% kind of EBITDA margin level. We have seen strong constant currency growth. So all this indicates that this theme is still in a lot of focus. Now 1170 is going to be a strong support zone for KPIT, and we expect the stock to hit 1320, 1350 kind of trajectory in days to come.
Okay, because Ashish Chatramota is with us today, the Nifty is opened in the green and very sharply. So up about 131 points, ladies and gentlemen, a very strong bout of short covering and a huge overseas tailwind propping this index at 19,125 up 133. It's almost two double centuries on the Nifty Bank, up 400 points at 43,091. So the gap up after 2 days of sustained selling is phenomenal. Let's look at the stocks that are contributing to this very strong uptick initially, at least. I have with me HDFC Bank. The counter up 0.6% at 1483. What's interesting, ladies and gentlemen, and Tanya, is that all 10 index heavyweights are in the green. Infosys taking it away 1.3% higher, 1372. What's Reliance doing? 2314 up 0.7%. ICICI Bank and Axis Bank in the green, up 1% each. What's ITC doing? ITC is 1% higher, 431.95. Bajaj Finance up 0.75%, 75.20. The Nifty is taking it away, ladies and gentlemen. The first 2 minutes have seen it hit the intraday R2 at 19,141, up 150 points. Ashish, because you are a very aggressive trader, would you take up the 19,100 call for next week's Nifty expiry, or what do we do?
So Shail bhai, I don't recommend on options. So sorry, but I'll not be able to comment this. But yes, from a pure Nifty structure perspective, I think there is we have seen a gap up opening in today's trading session, and we have formed a good base looking into last 5 days of data. This gives me a signal that around 19,000 now we are going to see a lot of support coming into coming at an index level, and the rally has a potential to move towards 19,300, which is a resistance zone. But I think there's a good possibility of 150 160 kind of points pullback from current levels. If we see a sustained move beyond 19,300, then I think the broader trend will turn positive. But yes, in the immediate shorter term, I think there is a strong possibility of a pullback towards 19,300 trajectory.
Okay, the 19,100 call for November 19th is trading at 135 rupees, ladies and gentlemen. Just keep this in mind, and at the same time I'm also telling you the value of the put of 19,100 November 9th. It's at about 82 rupees. Keep both these prices in mind, and then let's proceed forward. It's taking it away, which is Gujarat Narmada Valley Corporation, 702. HDFC Bank 1486. It's a sea of green across the board. And let's just look at the broader market indices. What are they doing? The Nifty gaining strength. Tanya, there are about 1,600 shares in the green on the National Stock Exchange, 140, 150 in the red. So the advanced decline ratio is 11:1. This is huge. Nifty 50, 49 stocks in the green. The lone that is in the red is Tata Steel. The Nifty 500, 474 stocks in the green, 27 in the red. Just remember the put value of 19,100 Nifty call November 9th at 82 rupees. We will see it in 20-25 minutes. That is supposed to be doing pretty well in the next 1 or 2 trading days. Since Ashish Chaturmota is here, Ashish, last time you spoke about Shriram Finance. The stock is at a record high, very nice valuations. What would you do at about 1934?
So we are still very constructive, and as a disclosure, we continue to hold the stock in our portfolios. My sense is, the stock is available at a very reasonable valuation as compared to the peers. And I think there is a strong credit growth momentum which we are witnessing in the space. So keeping this in mind, I think Shriram Finance, purely on a pure technical chart perspective, is also showing very strong relative strength. It has formed a strong base around 1880, and I think there's a good possibility of stock moving towards 2100 levels in the immediate short to medium term. But positionally, it looks like this is a long-term consolidation breakout. So I think stock will continue to make higher top, higher bottom formation in coming few months and quarters. So we are quite constructive about this stock in the medium to long term.
Mr. Chaturmota,
Tanya, let's mark CDSL.
Yeah, sure.
Tanya, go ahead. Hero Motors, CDSL. Let's just mark stocks.
Yeah, I was saying about Hero MotoCorp only, Mr. Chaturmota. If you see, the company has posted good set of numbers. Standalone profit at 1,053 odd crore rupees, up around 47%. of course, backed by healthy operating performance. What are your thoughts on Hero MotoCorp and the entire auto space?
So yes, I think as far as Hero MotoCorp is concerned, the stock is forming a very strong base. It is available at reasonable valuation with strong dividend yield, and I think post the new launch, I think there's a lot of interest which has come into the stock. Technically speaking, it is forming a higher top, higher bottom formation, and around 3040 there is a very strong support in the stock. Keeping this in mind, I think there is a strong possibility of stock moving towards 3300 kind of trajectory in days to come. But yes, we need to understand it is into a consolidation phase. So for any obviously from a chart perspective, it looks the charts are strong. There is a strength, but as far as momentum is concerned, for that I think we need to see a breakout about 3150. Then only I think some serious recovery will start happening in Hero MotoCorp. As far as pick is concerned, we have been continuously holding TVS Motors as our topic in the auto two wheeler space, and we continue to like the stock for more upside.
Okay, absolutely. And look at JK Tire and look at the moves that are coming in. Massive 372% year-on-year growth in its net profit at 242 rupees. And we can see that Street is clearly liking the numbers coming in from JK Tires. 339 is the level where we are at, Mr. Chaturmota. What would you do with this stock at these levels?
So it has been hitting a fresh all-time high, and I think today we have seen almost 10% kind of rally coming into the stock. There's a gap which we have seen in the stock. So I think from a risk-reward perspective, it looks very stretched. But yes, those who are holding this stock from a long time, then I think they should continue to ride this trend. I think the trailing stop loss comes around 310, and that's the reason why I said that the risk reward is not very favorable for anyone who is entering fresh. But yes, those holding should continue to hold with 310 as a trailing stop loss. Those who wants to re-enter, those who wants to enter the fresh position, then they should wait for a dip, and the stock should ideally come around 325. That would be a good area to initiate any long positions.
Okay, ladies and gentlemen, we've had a very, very strong opening so far. We are at 923 and the Nifty is gaining ground. It's taken out the second resistance at the moment 19157. I'll repeat the option trade that we had looked up. The 19100 call is now trading at, ladies and gentlemen, for November 9th, just a second. 154, I think. 1 second, please. This was the first thing that we had checked early morning. Yes, 159. We'll keep this in view, and the index is gaining substantial ground. A very, very strong gap up happening. A lot of my technical charts here point to a sustained buying happening on at least technical charts. So this is how the market is structured. Within the Nifty, like I had pointed out, 49 stocks are in the green, and the lone loser is Tata Steel, just flat, 0.5% lower, 116. Within the top gainers on the Nifty is Britannia, 3% higher, 45.37. L&T Mindtree, 1.5% higher, 50.84. I'll give you some very interesting statistics on what are the point changes that each individual stock is contributing when it comes to the Nifty. Okay, the Nifty change in terms of points is the highest by HDFC Bank, 28 points. Infosys is contributing 20 points in the green. Reliance about 18 points, L&T Mindtree about 17 points, and TCS 10 points. So this is how the structure is, and it is gaining further ground. Stocks at day's high within the index are Dr. Reddy's, 5444, Bajaj Finance 7648, Divi's Lab 3398, Bajaj Finserv at about 1594, Apollo Hospitals 4879. Anything, Ashish bhai, that catches your interest in opening trades?
Yes, so I think, as you rightly mentioned, the NBFC basket is looking very promising. We discussed about Shriram Finance. I think the same amount of strength we are witnessing in stocks like Cholamandalam Finance and Bajaj Finance. So again, as a disclosure, we continue to hold these names. I think Cholamandalam, after seeing a correction from almost 12, 60 kind of trajectory, it has corrected to 1140 and formed a new base. So now I think 1130, 1140 is going to act as a strong support. I think there's a good likelihood of a pullback towards 1250, 1260 in a shorter term. But positionally, it looks like stock is poised for a fresh all-time high towards 1350 trajectory. So yes, Cholamandalam is one stock which is catching the eye. And the second stock which we like is Power Finance Corporation. Again, a very strong consolidation which is happening near 52-week high, all-time high for the last 4 5 weeks, and we are seeing some strong volume activity coming into the stock on every dip. So it gives us a signal that PFC is showing some relative strength in the entire power space. So keeping this in mind, I think 244 is a strong support in PFC. And looking into the short term to medium term charts, it looks like stock is moving towards 270, 275 trajectory.
Okay, absolutely. And a sharp uptick on REC Limited as well, Mr. Chaturmutha. If we see 295 is the level, 4% uptick there on this particular counter. What are your thoughts?
So the same view, I think both PFC and REC are in the same line, and REC has seen a fresh all-time high in today's trading session, again with very strong volume activity. Considering we have, it's just 15 minutes past, we have started the market. So keeping this in mind, I think now 288, 289 is going to be a very strong support, at least in the shorter term time frame. And since it's a 4 5 weeks consolidation breakout, it looks like stock is headed towards 320, 325 trajectory in the next couple of weeks. So I think yes, both REC and PFC are showing very strong relative strength.
Absolutely. And Mr. Chaturmutha, you were talking about PSU banking space and you are bullish on this particular space. But I want to understand from you that what are your top picks from this particular space?
So I think if you look at the mid cap, PSU banks, and even something like Canara Bank or Bank of Baroda is showing very strong relative strength. So I think Canara Bank is one
Okay.
stock which has hit a fresh 52-week high after the consolidation, despite the fact that PSU Bank B's has not hit the previous high of 5960 trajectory. So it looks like Canara Bank is going to see some strong relative strength. 380 is a strong base for Canara Bank, and if this continue to hold, then I think this rally can extend towards 425, 430 trajectory in Canara Bank.
The good thing about Canara Bank, of course, is the very, very sharp outperformance that was announced in its quarterlies, as also the fact that the price that you see in front of you is at its highest level since November of 2017. So a 6-year high is what we see, and the moment it crosses 400, you'll see the highest level since October of 17. So it's again, like I said, the highest in half a dozen years. And we've had Mayuresh Joshi talking about the eloquence of Canara Bank's balance sheet, other fundamental guests as well. So should there be a dip in price, although it's overheated now, Canara Bank is something that you should look at. Where else is price ticking on the green side? Ashish, since you are here with us, it's been a while since we discussed what should be bought for Diwali. So your two top Diwali picks, whether mid caps, small caps, or large caps, which will give supernormal returns over the next 1 year.
Rather than mentioning it as a Diwali pick, I would like to say that which are the stocks which we like in our portfolio of stocks, and which we believe that they have the ability to show some strong relative performance. First one would be a stock like Polycap, which has been gaining a lot of market share. So from 12% market share, they have hit a level of almost 18% in the wires and cable segment. We have been seeing consistent rise in the margin profile of Polycap, and there is a strong, I would say, markets they are trying to create in the export market. So keeping all this in mind, and since we firmly believe infrastructure, real estate, capex and manufacturing theme is going to continue. So keeping this in mind, Polycab is a good proxy to play this entire theme. Stock has seen some good correction in the last couple of days from 5500 to almost 4950, 4960 trajectory. So keeping this in mind, I think this is a good bet from a medium to a long-term perspective, considering strong fundamentals and strong long-term charts supporting this rally. The second stock which we like is again CDSL, which is again a financialization of themes we discussed in detail. So just from a medium-term perspective, it looks like stock is headed towards 1800 in the short to medium term. But in the longer term, I think this is one stock we can continue to hold from a long-term perspective. The third name which we like is Tata Elxsi. Tata Elxsi has seen some serious profit booking in the last 6 to 9 months time frame, and we believe that this case theme is going to continue its upward trajectory. So keeping this in mind, I think Tata Elxsi is available at a reasonable valuation as compared to peers. It has formed some strong base around 7,000, 7,200 kind of trajectory. So one can continue to hold this stock from medium to long term perspective to see some serious strength coming in next 6 to 12 months time frame. And the last but not the least is Zomato. So I think we have been mentioning that stock is turning EBITDA positive, and Blinkit is also going to see EBITDA positive in next couple of quarters. We are going to see some 35 to 40% kind of CAGR growth in terms of earning momentum in Zomato. So I think in the new age businesses, Zomato would be our top pick, which we believe we could continue to hold from a medium to long term perspective.
Okay, absolutely got that. And also, Mr. Chaturmota, I would like to discuss RR Cable with you as well. So, if you look at the stock's performance, it is already up over 30% from its IPO price of 1035, and it made a strong debut on the Lal Street. But what should we do now with this particular stock, RR Cable, and what are your thoughts?
So again, the same view which we hold for Polycab or company like AI. I think RR Kabel is a recent entry into which has done a debut in the market. It has got almost 8% market share in the wires and cable segment. Again, they are exploring a lot of export market and also the FMEG is business, which will take time to turn around. But I think they are ticking the right boxes, and I think despite the fact we have seen a good rally after its IPO, and in the last couple of days, that's all in the last 10 to 12 days, we have seen some consolidation happening in the stock. But from a medium to long term perspective, it looks like RR Kabel has a potential to see an upward trajectory and move towards 1700 kind of trajectory. From a pure technical perspective, 1320, 1330 is going to act as a very strong support. And since company is gaining a lot of market share in the organized wires and cable segment, it looks like stock is going to get re-rated. A 20% compounding in terms of profitability is what we expect in the stock. So I think that number could reflect in the price performance also.
Okay, absolutely. And for the benefit of our viewers, I would just like to mention that RR Cable is the fifth largest player in the branded wires and cables market in India, and is one of the leading companies in India's consumer electrical industry. But now coming to you, Mr. Chaturmota, for auto space, because this space is also in focus, because of the numbers. How do you look at the sales data? Because two-wheeler sales, if you see, that have jumped up in October, but sluggishness in small cars, that has limited the growth in retail sales of passenger vehicles. So, how do you look at the auto sales?
So I
And
think
any picks that you would like to share?
yeah, so I would discuss about two topics which we hold, and we believe that the structural trend looks good for these companies. So in the two-wheeler space, TVS Motors, post its iQube launch, I think there is a very good interest we are witnessing, and I think TVS Motors is going to be a clear beneficiary of this electrification theme in the two-wheeler space. So keeping this in mind, although the valuations looks little stretched, but we need to look into the kind of operating generating cash flows. The company has been compounding for last many years, and that's the reason I think this valuation high PE multiple is being given to a company like TVS Motors. So yes, some consolidation is possible at current levels, but in the medium to long term, I think TVS Motors is one stock which is going to see some sustained rally in coming few years. So our topic in the two-wheeler space continue to be TVS Motors. In the four-wheeler space, we continue to like Maruti as our top pick. We believe that almost in the from a wholesale number, it is almost 2 lakh units which they've dispatched. So that's a very encouraging number. In terms of margin also, they have increased their margin to 12.5%. So that's also very, very encouraging. Once we see some strong rural recovery, we might see some strong pickup in the entry level car. But the kind of new launches company is doing in the SUV segment, that is gaining a lot of traction. So we believe market share gain can start happening for Maruti in coming few years, and that's the reason I think the stock has been hitting fresh all-time high. And this is from a long-term perspective. Look at this is 2017 high which we are witnessing now. So it's almost 6 years of consolidation which the stock has completed. So from a technical perspective also, it looks like TVS Maruti is going to continue its ride, and we expect 12,000 as a positional target in Maruti in next coming few months.
Okay, and since we are discussing auto space only, Mr. Chaturmota, what are your thoughts on Tata Motors? Because if you see the total sales, they are up 6% at 82,954 odd units versus 78,334 units on a YY basis. So, what would be your call on Tata Motors?
We like from a technical perspective, it is showing some good relative strength, but the challenge is because it operates in the global market, and since the global markets are quite challenging at this point of time, there is going to be a lot of volatility in the numbers, and that's the reason we would prefer a company which is more domestic focused, and that's why I think the preference is towards Maruti over Tata Motors. But yes, Jaguar has been doing reasonably well, and that's why I think the stock is also seeing some traction. But because we expect some amount of volatility, and that's the reason our preference is towards Maruti over Tata Motors.
Okay, absolutely got that. And let's discuss mid cap and small cap space also, Mr. Chaturmota, because we have seen a stellar rally when it comes to specific spaces like defense, railways, and PSUs as well. So, do you think these spaces are a little overheated now, and it is now time to book some profits, or do you see buying happening at these levels also?
See, from a valuation perspective, yes, it looks overstretched. From a one more data we were looking into is that if you consider Nifty 50 as a percentage of total market cap, that number has already reached to a level of 40. And whenever we have seen this number hitting 38 to 40 level, we have seen large caps outperforming small and mid cap in a significant manner. And this has been tested in last 1 decade, and it has worked phenomenally well. But if you look at from a mutual fund inflow perspective, we have seen the SIPs growing to almost 16,000 crores, and the significant portion of this SIP is going towards flexi cap, small and mid cap, and that's why I think a lot of liquidity inflow which is going to support this small and mid cap rally, and that's the reason, despite this data, we believe that selective small and mid cap will continue to do well. So we need to be very cautious about what we are picking in the small and mid cap space. We need to see whether the stocks which we are buying is getting support from the quarterly growth in terms of the top line, in terms of profit line, and also there is a significant amount of cash flow generation which is happening. If that is not the case, then I think there could be some serious derating which can happen in the multiples which we are giving to the small and mid cap. So the point is, the small and mid cap will do well, but the point is we need to be very, very selective in this space now going forward.
Okay, absolutely. I think we should pull up CDSL. Mr. Chaturmota's stock pick for today, and look at the stock performance of CDSL. Remember, we have been discussing this stock from the last 2-3 trading sessions, and it is up to the tune of 3.4% today. 1553 is the level where we are at. So clearly, good buying action that we are seeing on CDSL. But coming to you, Mr. Chaturmota, for Britannia as well, because if you see the numbers, the revenue growth missed estimates, but we have seen a sharp margin expansion. The company reported 19.5% growth in its profit at 586 odd crore rupees. So, what are your thoughts on Britannia and any picks that you would like to share from the FMCG space?
So yes, Britannia posted, a top line growth of hardly 1%, and the major
Hmm.
action is due to the margin expansion which we have witnessed, and that's the case in point, which will result in some serious, recovery coming into Britannia, because it has seen some correction from 53, 5400 zone to almost 4500. So post these numbers, I think some positive action can be expected in Britannia. So maybe a move towards 47, 4800 purely on a technical basis could not be ruled out. But if you look at till the time we don't see a serious recovery coming into the rural part of the country, we don't expect FMCG to significantly outperform, and that's the reason I think we are not very constructive, or we are very very selective, I would say, in choosing our stock in the FMCG space. So keeping this in mind, I think we expect FMCG to continuously underperform the other parts of the market, and that's the reason our topic would be restricted to names like ITC, Tata Consumer. But that is also from a relative perspective. If you look at absolute performance, we expect these stocks to be very very trading in a range bound manner rather than seeing some serious recovery.
Okay, absolutely. And one space that is buzzing today is real estate, Mr. Chaturmota. And we have been talking about this space. Lodha, look at Soba. These stocks are all up in today's trading session. What are your thoughts on real estate pack? I mean, any stocks that you like after the second quarter numbers, business update that the companies have posted?
So, I'll speak about Nifty Realty as a basket. So, as an index, so it has hit a high of almost 14 years. So, last time we saw these levels was in 2009. Now we are witnessing the same level in 2023. So, which speaks that there's a significant breakout which is happening from a larger time frame perspective. Now, why this is happening? We are seeing very strong, I would say, pre-sales which is happening, whether it's a DLF, whether it's Prestige, whether it's companies like Oberoi Realty. We are seeing we have seen the inventory levels coming down, so which is resulting into very strong pricing power for these developers, and we are seeing a significant shift from unorganized to organized players. So that's where the organized players are gaining huge market share. All this is resulting in a serious re-rating for companies within the realty space. So whether it's DLF, Oberoi, in the larger cap space, or whether it's a small cap companies like Kolte Patil, we are seeing some significant traction in terms of their numbers. So we continue to believe this breakout which has happened in a 14-year time frame should result in some serious rally coming into the entire basket.
Okay, absolutely got that. And now it's time for us to shift our focus to the corporate side. And the company on our radar today is Vari Renewables Limited. So, a little bit about the company. The company is a subsidiary company of Vari Group and spearheading the solar EPC business. The company posted its second quarter numbers as well, and stellar set of numbers, I would say. Quarter on quarter, the profit is up around 65%, and even on a YY basis, it is up around 100%. And the stock is actually a multi-bagger. It has delivered over 500% return in the last 2 years. And to discuss about the numbers and about the company, we have the management with us. We have with us Mr. Dilip Panjwani, who is the CFO at Vari Renewables Technologies. Very good morning, sir, and welcome to BTTV. First of all, congratulations, stellar set of numbers. So I would like to understand from you first that the margins they have expanded on a sequential basis also and on an yearly basis also. So how do you plan to sustain these kind of margins, and what is your outlook for FY24?
Okay, very good morning. Thank you for giving this opportunity to explain our results. As you rightly said, the margins have expanded, and we foresee margins to sustain for two reasons. One is the environment and ecosystem that support from the private players and the government both, and the volume growth that is leading this. Combined with this, we expect volumes to further go up. And then, once the volume go up, the operating efficiencies is a no-brainer in any company like EPC of ours. So we foresee, a good amount of sustainability in our results going forward.
Okay, absolutely. Got that. And what is the demand situation at this point in time, sir? And if you could also tell us about your order book, your unexecuted order book, and what is the situation at this point in time?
So, when we started, last year, we had, combined with this year order inflow, we were at about 1.16 gigawatt, out of which 264 gigawatt we have already executed. So the balance
Hmm.
unexecuted order book, is about 897 megawatt for us, And as we speak, we are chasing a few deals, and we are sure, we will be again in good of 1 gigawatt kind of an order book. But a bulk of it also will get completed in the second half.
Okay, absolutely. And talking about your expansion plans, sir, what are your plans as far as expansion is concerned? I mean, what new areas and new areas that you would like to add in the coming quarters?
Okay, so we have witnessed a significant growth in couple of years if you see our numbers, and we were
Hmm.
primarily present in EPC, and now we are EPC and IPP as well, So our expansion plans are, to strengthen the existing portfolio of EPC and IPP. IPP, we are just about, 40 megawatt, and we want to scale it up significantly further. But beyond that, we are also talking about how do we shore up our portfolio in terms of BIPV, battery energy storage systems on the EPC side, and thermal storage systems. So all those things are under consideration right now, and we are working to make a solid foundation for our business plan going forward.
Okay, absolutely. And, Miss, Sir, Reliance Industries, they have also entered this sector via SW Solar. So, how do you see this development, and how does it change the competitive landscape of your sector?
Well, there will always be, conglomerates when there are low-hanging fruits, but one has to see, what is the segment offering as an ecosystem. One is the government's goal to go 280 gigawatt of solar by 2030, out of the 500 gigawatt that the government is planning. And added to
Hmm.
that, policy initiatives that the government has taken in last couple of weeks, on repurchase obligations, Kusum, and, unified tariff for everybody. All these things offer low hanging fruits to everybody, and there's enough space for every one of us. So we have been existing player, and we will always capitalize on that. And there will always be a set of customers who would want to do business with players like us, rather than conglomerates. So those advantages will not go away, while away.
Right. Good morning, Dilip ji. Welcome to Business Today Television. It's such a pleasure to host you, and congratulations on what has been a wonderful performance. Let's look at the future. One, please tell us how are costs of solar panels when it comes to EPC customers have moved. What are the milestones that you expect in terms of lower final cost for customers, because we've seen over the last 5-6 years that solar panel costs have dropped dramatically.
So actually, from an EPC perspective, yes, it's a good time for our customers to finalize, because when the prices were high, the cost of, per megawatt setting up was in the region of, 4 to 4.5 crore a megawatt, and any drop in prices for modules will significantly help customers take a quicker decision, to lock in the prices. So definitely, it's a good time for EPC companies and the companies themselves, especially in the C&I segment, which are planning to do their effort towards climate change to lock in their orders.
Fair point.
Okay, absolutely.
And at the moment, what is the capacity expansion that you see as far as Vari Technologies is concerned? How much of fresh capacity is coming on stream? And one more question, what is the current capacity utilization at your company?
Well, I think that question relates to Wari Energies Limited, which is the module manufacturing company, which is our unlisted company as of now. I will be happy to, direct your question to our right relevant people. If there are any questions relating Wari renewable technologies, happy to address them now.
Fair
Sir,
point.
you have mentioned in your
Where would
press
you see?
release. Yeah. So I was saying, Shell, that the company has mentioned in its press release that India aims to reach 450 gigawatts of installed renewable energy capacity by 2030, with solar contributing over 60%. So I want to know it from you, sir, that how do you plan to tap this opportunity going forward?
Well, we already have been in this business for, as I said, since 2008, and we have been talking to customers. We have been participating in government tenders, and that we will continue, to seize this opportunity. And as we speak, we have got a 3 gigawatt of pipeline, out of which some portion, should materialize in this coming couple of quarters as well. So we are well on course, and we are adding significant manpower to our expansion plans as well. So I think we are very well positioned right now to seize this opportunity of 280 gigawatt that the government is planning.
Okay, absolutely. Got that. And you have also mentioned that the company remains committed to bring latest innovation and solutions. So if you could tell us more about these, innovation and solutions that you are working on at this point in time.
Sure, there are two, three opportunities that comes along the play, during the ecosystem. As we were talking a while back, I said you're working on thermal capacities, thermal heat storage capacities, battery energy storage system. So you're working on
Hmm.
some of these technologies. Plus, grid stability will offer more opportunities on design side. So we are adding those capacities and talent in our portfolio to go forward. So those are the two, three areas that are becoming focus areas for us as we go forward. But they are still in infancy stage, and you will see some action in coming couple of quarters.
Dilipji, would you share with us which are the fresh states within the Indian Union which are offering good conditions when it comes to fiscal policies to expand solar power?
Right now, every state has its own policies and regulations, which we expect that the government should take an initiative and unify them. But southern states, Andhra Pradesh and Gujarat, of course, remains in the top position. Maharashtra, these are some of the states that offer, a significant advantage in terms of policy and regulation, where we can install, some capacities.
Okay, absolutely. And on that wonderful
Okay.
note, thank you,
And
sir.
Thank you so
Yeah, you
much.
want to go ahead, Shell?
Dilipji, I just wanted to ask you in terms of government initiatives which companies in your sector seem to be looking at, what are the one or two changes that you would expect or are you hoping from the government to sort of introduce in the solar power sector which will help accelerate growth here?
Two, three things that we expect the government, to be working on is stability in policy, that is one, and bringing uniform policy across states. That is the second one, and land reforms in terms of, availability of the land through government. Those are the two, three things, quick things that we would want from the government that to support this ecosystem. The last one, of course, is on the supply chain side. A lot has been done, but still, somewhat, miles to travel, before we can assuredly say that we have stabilized our supply chain systems. Right now, we are good on certain segments like module. India is doing good, but from backward integration, cells, etc., and on the inverter side, some more incentives, etc., from the government should definitely help.
Okay, absolutely. And on that wonderful note, thank you so much. sir, for taking the time out and sharing these, valuable insights with us. And all the very best to you for the coming quarters as well.
Thank you so much. Have a good day.
Yeah. So, with that, it's time for us to get back to the markets, and it's a sea of green on the Lal Street today. So, good to see that. And actually, the Sensex is up over 500 points, and Nifty is also well back above that 19,150 odd levels. Clearly, Shell, bulls are back in action today.
Yeah, Tanya, and it's the weekly expiry plus the very strong overseas tailwind that you've seen coming into the index at the moment at 19,150, up about 160 points as far as the Nifty is concerned. The Bank Nifty, of course, posting better gains, 1.25% higher. 553 is what I see when you look at the Nifty as of now. The advanced decline ratio is very, very strong in favor of bulls. 46 shares in the green on the index, just 4 down, and those losses are just nothing to speak about. Very, very strong gains coming in index heavyweights. Let's again look at that picture. I have Infosys 1.2% higher, 1370. Remember, this is the third heaviest weighted counter. Reliance at the moment quoting at 2317, up 0.9%, and HDFC Bank 0.8% higher, 1486. These three stocks constructively look at about 32-33% of the Nifty in terms of weightage. So if they are in the green, and they are substantially in the green, that means things are looking better. Adding a lot of flavor on the green side is ICICI Bank, 0.8% higher, 921. Axis Bank 1.26% higher, 984. And gains across the board amongst heavyweights. SBI at 573.60, up 1.24%. ITC, Hindustan Unilever, TCS, all in the green. And stocks hitting record highs are the ones that you need to also look at. Some of them were discussed in trade already. RECL up 6%, 301. KPIT up 4.5%, 1271. MCX 2435 up 2%. Godfrey Phillips, Persistent, Medant, MCX are the counters that are doing phenomenally well. In terms of stock prices, we had discussed CDSL up sharply as far as price is concerned, 3.5% higher. This was Ashish Chaturmota's Diwali pick as well as a pick for today. Tanya.
Absolutely, Shell, and thanks for that quick market wrap. But it looks like it's going to be a terrific Thursday today. Let's see how the action pans out. But with that, it's time for me and my team to wrap up this edition of Market Today. But you don't have to go anywhere. Lots more coming up for you. Stay tuned, and many thanks for watching.
Hello and a very warm welcome to Business Today TV. I am Chetan Bhutani. Well, state-owned telecom infrastructure provider RailTel has come out with its quarter two numbers, and of course, a dividend announcement